missions to Mars. We are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I think what we've seen during this period of time is that communicating via video is not a fad. That we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Crude at 2011 highs from New York City this morning. Good morning, good morning. Futures positive just about. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open with Jonathan Farrow.
Live from New York City, we begin with the big issue: strong words and unintended consequences. President Biden with a message for Russia's leader.
Putin is now isolated from the world more than he has ever been. And I'm taking robust action to make sure the pain of our sanctions is targeted at the Russian economy. Together, along with our allies, we are right now enforcing powerful economic sanctions. We're cutting off Russia's largest banks in the international financial system. We're choking Russia's access to technology that will sap its economic strength and weaken its military.
A growing list of sanctions intended to leave Russian energy untouched. But oil giants Shell, BP and now Exxon are leaving the country behind, and Russian crude sales are increasingly under an embargo in all but name. Bloomberg reporting the following: that on Tuesday, Trafigura Group, an oil trading giant, offered to sell a cargo of the nation's flagship crude for $18.60 a barrel less than an international benchmark. The deepest discount ever, but still drew no bids. Supply fears are driving crude to new highs and taking other commodities with them. European gas has surged and wheat has rallied through highs not seen since 2008. Our team coverage begins right now. Bloomberg's Anne-Marie down in D.C., Maria Tadeo in Brussels. Anne-Marie, through 110, how much of a problem is that?
It's a massive problem. You look at WTI going through $110 a barrel. Jonathan, how does this trickle down to the American consumer as this administration tries to fight inflation? It's going to end up on the supply chain. It's going to end up at the gasoline pump. You mentioned wheat. That is going to be a global inflationary problem for food shortages and the likes. Jonathan, what we saw from this administration, the president reiterated it yesterday, 60 million barrels, 30 million coming from the United States in terms of the Strategic Petroleum Reserve. The issue is that would work if we lose, say, 2 million barrels off the market a day for a month. The issue right now, and you called it an embargo all in name, individuals are self-sanctioning. It is very difficult right now to try to get refiners, ships to process Russian oil.
Energy Aspects pointing out, AMH, that about 70% of Russian crude is now struggling to find buyers. When you speak to people in Washington, the energy experts, do they think this is something that gets ironed out in the coming days and weeks, or something we might have to live with?
Well, at the moment, Jonathan, they'll just remind you that energy trades are right now not under embargo. They're not sanctioned. They have these carve-outs for this reason exactly. They want to make sure that Russian oil maintains on the market because it is a global market, and they don't want to see the risk, the geopolitical price be rising in the oil market. So right now, they're probably going to try to clarify what those carve-outs actually mean. The issue is people are self-sanctioning. They don't want to deal with what could potentially be toxic assets in Putin's Russia. Or potentially, the administration has said energy is on the table. So what if you decide to make a transaction in 2 weeks' time? Are you then going to have to lose it? It is just becoming too fluid of a situation, and no one wants to touch it.
This is theory meeting reality, and to your point, from Energy Aspects and Amrita Sen, several ship owners reportedly unwilling to make bookings from the Baltic or Black Sea due to the lack of war insurance. This conversation's changed quickly. Maria Tadeo, the conversation on the ground in Ukraine changing quickly as well. What's your latest read on the current situation?
It is, and to Anne-Marie's point, we know that there will be a finance ministers meeting here in Brussels, and one of the debates and one of the talking points will be what to do with energy in Europe and what to do with sanctions. Is that the next frontier? And if it is, well, you can see why for consumers it's going to be problematic. And in fact, to me, it's very telling that we now hear from the German, the French, the Italian, the Spanish leadership say this war is going to go on for long and it will have repercussions, and we need to be aware that this will have an economic impact. Now, that is on the economy. When you look on the political front, Jonathan, we have reports suggesting that perhaps today the Russian and the Ukrainian delegation could meet again. Remember, they met on Monday. There was no conclusion from that meeting. It's unclear where they would meet. There were reports at one point suggesting that it could happen in Poland. We know the Ukrainians do not want to go to Belarus. They fear for their safety. They fear this is a trap. But the reality is, even if you get the two sides to agree on a location at time and they sit down, the problem is Vladimir Putin says, my goals here is to get rid of Zelensky, who is now an icon in Ukraine, to take the weapons away from Ukraine, which the Ukrainians say they are not going to do as long as the war is still happening. And then secondly, ditch that NATO and EU membership pledge. The problem is, of course, is that the Ukrainian government has already filed from EU membership yesterday, and they continue to say NATO at one point is going to have to help one way or another, whether that means shutting down the skies. Well, that's one option, and then potentially down the line accepting this membership from Ukraine. So even if they meet, they're so far away. It's very difficult to see at this point on day 7, with people being shelled on a daily basis, how they agree on a diplomatic solution going forward.
Maria, thank you. Maria Tadeo over in Brussels, Anne-Marie down in DC. AMH will touch base a little bit later this hour. You're all familiar with this stat. Europe depends on Russia for about a quarter of its crude, a third of its natural gas. That gets tons of attention. This line doesn't get enough. Russia and Ukraine supply more than a quarter of the world wheat exports, 1/5 of corn sales, plus about 80% of sunflower and oil cargoes. What are the economic and political consequences of that worldwide? Let's get into that right now with Ironside's Barry Knapp, Invesco's Mo Hagbin, and Katie Kaminsky of Alpha Simplex. Katie, the consequences of crude through 110 for this market, what are they?
I mean, this is serious. We've seen a massive move, and all of these price increases are going to trickle down at some point. We already had a massive headwind of inflation on the commodity sector. This is really going to put even further pressure, and wheat is yet another asset where we've seen sort of massive movements in terms of price momentum. And all of this is just going to eventually create some challenges for other sectors of the economy. And it doesn't look like it's going to stop if this conflict is not going to be resolved in a steady fashion.
Well, Barry, when you have conversations about the resolution of this conflict, do any of you, your team, people you speak to, can you come up with an off-ramp for President Putin?
No, not really, John. It's hard to see how this resolves itself without, in a truly favorable way, without Putin somehow getting removed by the oligarchs. So that's highly speculative. I just don't see an easy off-ramp.
Well, Barry, if there's not an easy off-ramp, do you have to assume it gets worse before it gets better? If you assume it gets worse before it gets better, do you assume energy's on the table for sanctions? If you assume that, do you assume crude has to go higher?
Yes. Listen, there was always a fairly big imbalance in crude, and as Omicron faded, we still hadn't gotten jet fuel or jet demand back to where it had been. So there was a supply and demand imbalance. I've never been longer energy stocks in my life than I am now. And that whole process started a year ago. That imbalance has been building. We had a, sort of a flash sell-off back in October when Omicron took the headlines. But no, this is an ongoing problem. So then the question becomes, and it's a question you've been asking all morning. First of all, where do we get demand destruction? And I hear some estimates from fairly credible sources of 135 to 140 or so on crude before it really starts to impact consumption in the U.S. And then what do the stocks reflect? And I asked an old colleague of mine from Barclays about that yesterday, and he said for the E&P names, it's something like 65 or 70 is the embedded, or implicit price in U.S. E&P names. So, even if we were to get some sort of a resolution and, you had a sell-off in crude, the stocks are still attractive.
Well, in the meantime, we're seeing some of the big oil majors back away from Russia, BP, Shell, Exxon, now Trafigura reviewing options for its passive holding in an oil project in Russia as well. Mo Hagbin is just lining up to back away from Russia. In the meantime, crude is just backing up higher. 111 on Brent, 109 on WTI. We're off session highs. I'm trying to work through this, and Mo, help me with all of this. The commodity community now are telling me that we need to see demand destruction to rebalance this market. If that's what the commodity community is saying, on the equity side, do we need to assume that forecasts need to come down as well for earnings in America, worldwide?
Yeah, look, it's an interesting question, and I think, the humanitarian crisis on the ground is what we're watching first and foremost. But as we think about markets, commodities is an area that we're watching very closely, obviously with energy, but also with industrial metals, as well as agriculture, which, as you know, wheat and corn are big agriculture markets for both Russia and Ukraine. We don't necessarily think that the spillover effects of the equity market, at least at this point, is something that we're positioning for. We continue to be slightly overweight equity, although defensive equity. So we've kind of gone up in quality and low volatility and up in the market cap in the equity portfolio. And we ballast that with the long duration or, an overweight to duration on the long end of the curve. So today we are not really positioning for that spillover into the equity markets, John.
Katie, Citi just published this. I want to bring that to all three of you, and we can build on this through the programme. Citi and Andrew Hollenhorst say the following: we strongly disagree with yesterday's pricing out of rate hikes. To the contrary, we expect the most durable US economic implication of geopolitical tensions to be more inflationary pressure and consequently more aggressive monetary tightening. That from Citi in the last hour. Katie, do you agree with that?
Yes, I have to say that I do, because if you look at the mismatch, and if you look at the technical signals in terms of where we are with numbers and inflation so high and interest rates so low, there's going to be constant pressure on central bankers to tighten that gap. And what I think about this recent environment, what was really interesting is, yes, we saw bonds rally yesterday out of a pure risk-off trade. But the truth is, even if there's a risk-off trade on the table, who's going to want to hold bonds for long term if inflation is at 7 and could go higher now because we're going to have more supply problems? And energy is one of the core, at the core of our economy. So I think things are looking a little bit rough. And I think that the Fed is actually even a harder place than where they were before. And so I do believe that they will have to react. It may just not be as quickly, but they will have to do something at some point.
Chairman Powell coming up a little bit later. Futures right now at 0.4%. Katie, Barry, Mo going to be sticking with us. Let's get you some moves ahead of the opening bell. With that, here's Abby.
Morning, John. And sticking with the surge in commodities after the Bloomberg Commodity Index yesterday up the most since 2009. We're seeing that, as you are all talking about today, once again with oil at its highest level since 2011. And this is really showing up in the energy complex. ExxonMobil, Devon Energy, Schlumberger, and Valero. So the entire spectrum just surging higher, up more than 1%. Really pretty incredible. And it's extending right into the metals, too. Aluminum at another all-time high. We have Freeport-McMoRan and other metal and miners. Steel stocks also surging. Really, this is the bullish part of this surge for the commodities. It's interesting, John, that 2009 buying, that was on green shoots, but today it's, of course, on these supply fears.
Abby, thank you. Coming up on this program, President Biden pulling the trigger on a second release of American crude.
The United States has worked with 30 other countries to release 60 million barrels of oil from reserves around the world. America will lead that effort.
And so far, it hasn't made much of a difference. That's next.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is not just a deodorant. This is an all-out experience. My old deodorant, my boyfriend's old deodorant.
These always stay in my clothes.
Russia invades Ukraine.
We have proven our strength.
The nature of this war changed yesterday.
Turn to Bloomberg for up-to-the-minute reporting from around the world.
Ground troops are closing in on the Ukrainian capital.
Swiss abandon neutrality.
And analysis of what it all means to you.
Energy is on the table.
We could see oil prices moving closer to 120.
There is a lot of interest to offload Russian assets.
Look to see more companies announce their exits from Russia.
Keep it tuned to Bloomberg Television and Radio.
Invading a foreign country has cost around the world. Tonight, I can announce the United States has worked with 30 other countries to release 60 million barrels of oil from reserves around the world. We stand ready to do more if necessary, united with our allies.
Is it enough? OPEC Plus joins in, raising its production by 400,000 barrels a day. Those efforts doing little to cool prices, with crude surging past 110. Energy Aspects and Rita Sen said this is COVID in reverse. We can easily breach 150. We have genuinely never tested where prices need to be to really curtail global growth. Bloomberg's Will Kennedy joins us now. It's a conversation Amrita and myself had earlier this morning, Will. It's COVID in reverse. The reverse of spring 2020, when demand collapsed and the only way to balance the market breaching storage capacity was negative prices. Will, who are you speaking to right now about how high crude needs to go to destroy demand and rebalance this market?
What we have is a supply collapse. We have a supply collapse that is gathering pace in Russia, John. People do not want to buy Russian crude. They can't get to ships into Russia, even if they do. And traders are increasingly realizing that means that we have 5 million barrels a day of supply, which is in jeopardy unless something changes soon. So as you say, prices will go higher, and we're seeing that process today. The market is incredibly stretched. We're seeing that in the spreads between oil right now and oil for a couple of months in the future at extraordinary levels. And it doesn't seem that there's much to stop the market until, as you say, people stop consuming because it's too expensive. Where that is, well, we don't know yet.
Amrita said maybe 150, 170. We don't know because we've never tested the theory before. Will, the numbers that came out of Energy Aspects, about 70% of Russian crude is now struggling to find buyers. Is that a boycott, Will? Is that a misunderstanding or a lack of understanding about what the sanctions are? Well, the reason I ask those questions is because I'm trying to work out if that's a story that sticks or fades in the coming weeks.
It's a really good question. I think there are three things going on right now, John. Number one, although oil isn't sanctioned, people are afraid of falling foul of the financial sanctions and the banking sanctions, and there's a lot of effort by compliance departments to understand what they can and can't do in terms of moving money around to buy oil. There's a reluctance from banks, some for that reason, to finance these transactions. There's a reluctance of ship owners to go to Russian ports, and that's a big part of this problem. And finally, among many players, there's a moral revulsion, if you like, or a reputational worry about doing business with Russia. You put all those things together, and it's really shrunk the universe of buyers. Now, Amrita made this point in one of her notes, which is as we go forward, as some of those issues around what the sanctions actually are resolved, I think she expects quite reasonably that Asian buyers especially will start buying Urals Russian crude again because it's cheap and they need the oil. There's a huge demand for it. So I think it is bad right now, but it probably will abate somewhat over the coming weeks. But that said, even if it's only 30% of Russian oil that's not getting bought for all the reasons I said, that's still a massive hole in global supply that we need to fill, either through new supply from somewhere else or a reduction in demand, as you say.
A market thirsty for crude. Will, great work to you and the team. Tremendous work. Really enjoyed the reads over the last couple of weeks. That's the line from Energy Aspects. About 70% of Russian crude trade is frozen. They indicate that this will drop to less than 20% once sanctions details emerge. Katie Kaminsky, I want to come to you. We talked about higher crude. I want to understand how you push some of that, the dynamics in the crude market, the prospect of demand destruction through the bond market. The move we saw yesterday in European bonds, Katie, massive. The UK, Germany, the US too.
Yeah, I think that was a really difficult day for the bond markets, especially for those of us that are positioned short, that are anticipating rate rises at some point. But for me, it feels like a temporary reversal to a longer term trend. Yes, I do think central bankers are going to become a little bit more wishy-washy under the stress of the situation. But on the other hand, I do think that longer term, those are going to be the right positions to be in because inflation is coming in hotter. And it's not something that's going to get better from what's going on right now with oil. And, in some sense, we just have to keep and hold out and wait. But it was a tough day yesterday for European debt.
This is the story of the moment. The bond market moving off the back of what's happening more broadly in the global economy because of what's happening in Ukraine. Mo, I've barely talked about the pandemic now for a week. Hardly talked about it. And just off the radar, every single day you see more restrictions being removed across America. And this headline just crossed from Dow Jones. China exploring an exit from the zero-tolerance approach to COVID. Mo, we've almost forgotten the story of the last 2 years. How important is that headline to you?
Yeah, it's interesting. It's a little bit conflicting with what we know is going on in Hong Kong, where there has been talks of another lockdown, and I think cases there have been, unlike the rest of the world, increasing and being problematic. So I think the headline itself is very important if it's true. That said, we're still kind of dealing with another uncertainty that, isn't taking the headlines, but it's still in the background. And I think everyone is still watching that carefully as the dynamic can change quickly.
Barry Knapp, your take.
Well, I'm not surprised. It was absolutely incredibly inane policy. And there was always some expectation after the Olympics they would start backing away from that. Core goods prices are running at 11.7% year on year. They're likely to come down for sure. The issue, though, is we're moving from the first order effects of pandemic on inflation to the second order effects. And you can toss it, and really where I'm going with that is now housing is likely to be the big driver of inflation on, through the course of 2022. Medical care inflation is just rebounding. Education hasn't even begun yet. So you have all those effects. And then something else I wrote about this week, which central bankers are conditioned to dismiss, which is a greater probability of energy and commodity price pass-through. If we are truly going to a multipolar or deglobalized world, we could very easily go back to the 60s and 70s where energy prices did move in lockstep with service prices and goods prices, and we really had energy price pass-through. So, Larry Summers said it on your program a little bit earlier that the risk is the Fed and other central banks do too little, not too much. And this energy price and commodity price pass-through is just yet another example of that.
So let's revisit that in just a moment, Barry, because that final point you're making, I think, is critical. Mohammed made this yesterday. If a central bank loses policy flexibility, that's not a good thing. That's not a good thing at all, and we need to work out what it means for this market. Inflation due March 10th, the estimate so far for America, CPI, 7.8%. There's only 3 estimates in, but that's the survey so far, 7.8% from a previous read of 7.5. The conversation continues with Barry Knapp, Mo Hagbin, and Katie Kaminsky coming up in the morning calls and later.
Options were created to limit and mitigate risk, but most people don't know what they're talking about or what they're doing. Hello, my name's Vince Dowd.
This is Bloomberg.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Five minutes away from the opening bound, the state of play as follows. Equities higher by 0.5%. No real drama here, up about 1/3 on the Nasdaq. In the commodity market, 2011 highs, briefly. Very close to 114 for a moment on Brent. On crude right now, WTI 112.30 on Brent, WTI at 110.38. That's the price action. Let's get you some morning calls. Wolf Research downgrading Zoom video to peer perform, expecting a material deceleration in revenue growth. Goldman upgrading all state to a buy from a sell, seeing a more supportive environment with pandemic-related headwinds fading. And finally, Bernstein upgrading HP Enterprise to outperform, highlighting the stock's compelling valuation and strengthening demand trends. Coming up, Exxon, Apple, Nike, a long list of corporations abandoning Russia. That conversation just around the corner from New York. This is Bloomberg.
at the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
"23 seconds away from the opening bell in New York City this morning. Good morning. This Wednesday morning, equities up 0.6%. Equities up on the Nasdaq 0.5%, on the Russell by 0.7%. A lift with crude very close to 2011 highs. Let's your opening bell, switch up the board and get to crude. We look like this on WTI. WTI right now on crude 109.77. Crude up by more than 6%. The high of the session 112.51 on Brent, very close to 114 a little bit earlier today. Euro dollar a break of 111 to the downside, a third straight day of euro weakness, 110.98, negative 0.2%. And yields higher, reversing some of yesterday's move, up by 6 basis points, approaching 180 at 178.72. That's the open behind us. 20 seconds in. Let's get you some movers. Here's Abby.
John, let's stick with that strong energy story because it is, of course, one of the top sectors on the day. The energy complex rallying with crude at these unbelievable levels on supply fears. We have the likes of ExxonMobil and ConocoPhillips and many other names sharply higher. But it's not just oil and crude, the energy complex that's rallying. It's also natural resources in general. Bayer up almost 4% in Europe and U.S. steel up 2.2%. So this theme continues. Now, we have an overall rebound, at least right now. Will it stick? But a piece of it, of course, is big tech, which yesterday was down sharply. Apple rallying today. Salesforce.com up even more, up 3.9% on a very strong quarter and an outlook that beat Wall Street. And then the banks yesterday really beaten down. JP Morgan Chase, the big banks up just slightly, but some of the regional banks, such as KeyCorp, up even more. But KeyCorp up 2.3% today. Yesterday, down more than 8% as yields were down. So let's see whether or not the recovery continues to take hold. But certainly stocks pretty strong right now, John.
Abby, thank you. Thank you very much. We've taken so much out of the front end of the curve. Twos are back down to 143. On Friday, the high of the session, through 160. In fact, 20 basis points north of where we are now. We're up 8 basis points today. Jim Bullard of the St. Louis Fed just said this. Inflation is running well above the Fed's target. The situation calls for a rapid withdrawal of accommodation. Rapid, the word that he's using. Current policy is exacerbating the inflation problem. We must follow through on rate hikes and balance sheet runoff. 143 at the front end. You just wonder how much we need to build out the front end again, because over the last couple of weeks, we've taken it all the way back down on the belief that the situation in Ukraine is going to mean the Federal Reserve can't do as much as what this market thought the Federal Reserve would do maybe a couple of weeks ago. Chairman Powell later, he might not want to provide forecasts, but on March 16th, we'll get forecasts from this Federal Reserve. Elsewhere, we have seen a growing list of corporations pulling back and abandoning Russia. The latest automaker Ford suspending operations, writing in a statement, our current interest is entirely on the safety and well-being of people in Ukraine. We won't speculate on business implications. Joining us now for more, here's Kelly Lights.
Well, John, this list has become a laundry list. It is just company after company making these announcements. You have Ford, you also have the world's largest technology company, Apple, and the biggest athletic apparel maker, Nike, making these announcements yesterday, both of which are halting product sales in Russia after the invasion of Ukraine. This follows Hollywood studios like Walt Disney World pausing the release of new films in the region, and of course, announcements from a number of big oil players. Exxon now joining the likes of BP and Shell in exiting Russia, responding to the pressure on energy companies to do something in the face of the invasion of Ukraine, and exiting investments at a likely cost of tens of billions of dollars to do so. And adding to the list earlier today, Trafigura reviewing options for its passive holding in Vostok Oil. It had bought a 10% stake in that Russian oil project that is controlled by Rosneft back in 2020, but the company now saying it immediately froze investments in Russia following news of the violence. What it really comes down to, John, is this dual challenge of financial risk on the one hand and reputational risk on the other. But in regard to financial risk, we also have to take a look at some of these U.S. consumer goods companies that have heavy exposure in Russia. The likes of Coca-Cola, which gets 21% of its volume in Russia and Ukraine. McDonald's, 9% of revenue. AB InBev controls 14% of the market share in those markets. And at what point do they face significant risk because of the conflict and also because of the sanctions that are resulting from the conflict that could hit the Russian consumer, John?
Kaylee, thank you. It's a situation we need to follow for the banking industry here in the United States, not just worldwide. Citi kicking off its first investor day in nearly 5 years. James Fraser doing a ton with that bank very, very quickly. Bloomberg's Sonali Basak joining us now with an update. And Sonali, you're here and not there because nobody's there, right?
Yeah, they actually had to cancel the in-person event because some of the presenters had tested positive for COVID-19. Nonetheless, it is a huge moment for Jane Fraser, who off the bat had acknowledged the difficulties that the bank had faced and that they have not lived up to their full potential. If you take a look at Citigroup stock, not only has it underperformed its peers, John, it is the only bank among the major U.S. banks that is trading below its book value and meaningfully below its book value at 0.6% pretty much of its book value. So, a lot of troubles over there at Citigroup. In the first couple of months of Jane Fraser's tenure, she announced a lot of cuts. She announced that she would be stepping back from certain markets and certain businesses. Now she is giving a plan for growth. But what does a new normal look like for Citigroup here, even with expanding certain business lines and investing? 11 to 12% returns on tangible common equity is less than what it made last year. It is less than what they hoped for from their prior investor day, and it is less than what you'll see over at the major banks such as Morgan Stanley, Goldman Sachs, and JP Morgan that have announced plans of 17% or higher. So this is going to be the new normal for Citigroup while we look forward. I also, though, John, want to pivot a little bit and talk about Russia and Citigroup. Russia is only about $5.4 billion worth of country exposure, less than $10 billion in total exposure for Citigroup. But Citigroup is really a interesting example here of a big global bank in Russia. Remember, since 2014, when they first started reducing their exposure to Russia, the exposure is relatively unchanged from where it was back in 2014. The country exposure is less than 0.3% of the company's total, but Citigroup, like JP Morgan and many other banks, as global transaction banks, are now sitting there with work with the central government, trying to untangle themselves from any potential sanctions that might play out through SWIFT or with the central bank or the sovereign wealth fund or otherwise.
Some of the companies are just taking a stance. ING Group this morning over in the Netherlands, Sonali said this: we have decided not to do any new business with any Russian companies. Now, new, obviously the operative word there, the important word. Have we seen any American bank on Wall Street take that stance?
Well, we have seen them step back over a number of years. We've seen banking leaders over the last couple of years, though not this year, take a strong vocal step back from doing any business with the Russian government. But with that said, remember, there's a joke on Wall Street that the big U.S. banks are semi-utilities here, and they move where the government goes. So until there are stronger sanctions, and until actually some of the sanctions that have already been announced are cleared up, it's going to be difficult to figure out how to untangle them from the Russian financial system.
We need to clear that up. Sonali, great work, as always. Sonali Basak on top of Wall Street, as you'd expect. So what have we got here? Early days of forced liquidations, potentially boycotts as well, companies stepping back for this perceived moral obligation that they're talking about as well. Mo Hagbin, the selling hasn't even started. BP wants to offload its Rosneft stake. Let's see if they can and for what price. I saw Roman Abramovich in the UK trying to sell Chelsea Football Club. Again, he's got a price, but he's got a target of the middle of this month. Let's see if he gets the number he'd like. Mo, it just seems to me that this is the start of a process. From the people that I speak to, knee-deep in emerging markets, that's what they keep telling me. It's the start of the process. We haven't seen all the moves yet. Would you agree?
Yeah, I think that's right. I mean, I think one of the things that is going to be important is the ability to transact, right? And as we know today, very difficult both on the equity side and the debt side to transact. So thinking about your investments in emerging markets, specifically Russia, and how do you actually manage that? I think one of the major things that would have to happen in order for that to clear up or for that to be more pronounced across kind of the asset management community would obviously be country inclusion in several of the indices. So until that gets sorted out and the markets open so that you can actually transact, you're basically sitting on your current position.
A lot of people looking to JP Morgan for some of those decisions to be made maybe soon. Mo, the framework that you've got at the moment, just position for a slowdown, cross-asset through the portfolio. Is that the approach? Does that approach stick even with the dislocations we've seen over the last couple of weeks?
Yeah, look, I mean, that was the positioning before this invasion and war. So, we're sticking to that. And what's important about that is not only what we believe is kind of the environment in a slowdown for risk assets, right? Generally speaking, there's a convergence and there's very little dispersion around risk assets, but still positive in all cases. But what we do is we get defensive, right? So we've gotten defensive on the equity side. And as I mentioned earlier, and I mentioned the last time I was on, we've had an overweight to duration, right, in the long end of the curve. And we continue to believe that the yield curve will flatten.
Invert by year end, Mo? Would you go that far?
I don't know if I'd go that far. I think we still have about a 75 basis point spread between 2s and 30s, but flattening, absolutely. We don't see that long end of the curve moving. It's anchored.
Katie, I get the feeling a lot of this resonates with you.
Yes. I mean, I think my challenge has been that we've been neutral to negative on equities to some degree because we tend to be a little bit on the faster end and more technical signal basis, but cross-asset signals have been very interesting to follow this year. We've seen a lot of pressure on fixed income. We've seen massive signals in commodities. And I think for the equity markets, you have to ask yourself, what looks good? Maybe the Fed being nicer or easier for a short period of time, but there's a lot of things that are going to have to be sorted out. So there's a lot of things that are kind of piled up against the equity markets. So I tend to be a little bit more concerned that this is not really the year of great equity returns yet until I see some other indications.
Barry Knapp, the final word. Have you heard enough from enough bears to get bullish?
Oh, yeah. This was in our forecast. When the Fed starts normalizing policy, you get 10 to 12% corrections. Every business cycle since World War II, you had one of them. Last cycle, you had 8 of them. We expected this to be the first trade out of the gates in 2022. We've got it. We think we've had an appropriate adjustment to Fed policy normalization. The typical pattern is you'll recover. The market will trade in a range for a quarter or so, and then we'll be back on our way through the rest of the business cycle. So for me, this is a buying opportunity. When you get a chance to put money to work in the S&P anywhere around 4,200, you need to be doing it. You need to be getting into the reflationary sectors. We're moving towards deglobalization, a big capital spending boom, industrials, energy, materials, financials, all of those sectors. This is what investors should be doing into this week.
Barry, I've heard you say that a few times over the last 12 months. That's your big theme. Do you get the feeling what we've experienced in the last week just accelerates that then?
For sure. This is, again, this is what happens when the Fed starts normalizing policy. So we're going to get this risk off. We were always going to have a difficult environment in the first half of the year. But these are your best entry points for most investors. That obviously the recession-related low is a great entry point. Most people don't do it. But then if you think about the drawdown we had after QE1 in 2010 or QE2 in 2011, those are excellent entry points to put some serious capital to work. Sure, it's going to be a difficult environment as the Fed withdraws liquidity, but it's never terminal for the business cycle. And if Larry Summers is right, the Fed's going to do too little, not too much. Eventually, that'll catch up to him. But I don't think Jerome Powell's about to evolve into Paul Volcker anytime soon and overdo it and drive us into recession. That just doesn't make all that much sense at this stage. So equities are still a much better bet than fixed income, than long duration. In a lot of ways, we think this is going to look like the early 60s, where bond returns are negative. The 60-40 model, although that wasn't really a thing back then, broke down. But equities can earn out pretty strong earnings growth because nominal GDP is likely to be much stronger than it was last cycle, which means stronger trend earnings growth.
Barry, good to catch up, buddy, as always. Barry Knapp, to Mo Hagbin, thank you, sir, and to Katie Kaminsky. Your equity market up 0.75%, 43.38 on the S&P, up about 32 points. Coming up, President Biden vowing to confront Russia over the invasion of Ukraine.
The clean energy future is here, fueled by our reliable natural gas network, powered by safety, responsibility, and authenticity, focused on reducing emissions right here, right now. Williams, we make clean energy happen.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
En nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las mediciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
A Russian dictator invading a foreign country has cost around the world. And I'm taking robust action to make sure the pain of our sanctions is targeted at Russian economy.
President Biden condemning Russia's Putin and meeting rare bipartisan approval. A different story for his domestic agenda, with Iowa Governor Kim Reynolds blasting the administration for surging prices.
They were warned that spending trillions would lead to soaring inflation. They were told that their anti-energy policies would send gas prices to new heights. But they plowed ahead anyway, raising the price at the pump by 50% and pushing inflation to a 40-year high.
Anne-Marie down in DC, AMH, how well received has that message been in the last 12 hours?
Well, Jonathan, the start of the president's speech was really the centerpiece in the sense that this is where he was able to get bipartisan support. And we should note the Ukrainian ambassador to the United States, Oksana Markarova, really stole the show. Every single member of that chamber stood up and clapped for her. So this was really a pivotal moment of his speech, a speech that had to be reworked because obviously this president is now a seventh day in. He's a wartime president. He had to rework that speech. When it comes to the energy story, and you heard the Republican rebuttal, the president talked about the fact that he wants to lay harsh sanctions on President Putin in a moment that was almost ad-lib because it wasn't in the pre-prepared marks. He said he doesn't even know what's coming at him, but he wants to mitigate the issues at home. And right now, that is going to be the biggest challenge, Jonathan, because what we know is that corn, wheat, oil, nickel, that goes into EVs for batteries. All of these prices are surging.
It's really difficult. Credit to the administration. Didn't embarrass its allies abroad. Europe encouraged them to go further. I think for a lot of people, AMH, European allies have gone much further with sanctions than many people thought even just a week ago. Now it gets really difficult. How do you offset some of the pain caused by the sanctions introduced and the confusion, the unintended consequences of them too? We had the reserve release yesterday. Anne-Marie, we saw this story, this movie play out last year, at the back end of last year. Same story. Crude higher again. What can they do?
Yeah, and the last year when they first decided to tap the SPR under this administration, we saw potentially maybe 10 cents off of a gallon of gasoline. I mean, that is the whole point of putting oil on the market, so you can mitigate the concerns on the gasoline pump. Jonathan, the question is, what do they do? It's very difficult. There are knock-on effects from these sanctions, even though they say that there are carve-outs for the energy trade. Potentially, I'm just thinking out loud here of something that could happen if there was an Iranian nuclear deal, Jonathan. That could potentially mean more barrels pretty immediately on the market to quell some of this. The other option, of course, is they were talking about a gas tax holiday at one point in the Congress. The issue with that is what president is going to want to then put that tax back on. It's incredibly difficult to try to mitigate these issues when this is a global marketplace when it comes to crude oil.
Anne-Marie, thank you. Down in DC, as ever, AMH crude. 108 on WTI. We're back away from session highs on Brent to 110.90 after coming very close to 114 on Brent a little bit earlier this morning. Chairman Powell coming up a little bit later on Capitol Hill at the top of the hour. The quote from him looks like this: with inflation well above 2% and a strong labour market, we expect it will be appropriate to raise the target rate for the federal funds rate at our next meeting later this month. Mike McKee setting the stage for that rate hike in a couple of weeks.
Yeah, there's not a lot of bipartisan agreement in Washington, but Governor Reynolds and the president would probably both agree with the Fed chair's assertion that they're going to start raising interest rates. They need to do something about inflation, although in his prepared remarks, Jay Powell is still sticking with the transitory story, even though he doesn't come close to using the word. Here's what he says. We continue to expect inflation to decline over the course of the year as supply constraints ease and demand moderates because of the waning effects of fiscal support and the removal of monetary policy accommodation. But, he says, they are attentive to the risks that it still continues to rise, saying they'll use their policy tools as appropriate to prevent higher inflation from becoming entrenched while promoting a sustainable expansion and strong labor market. Now, he assesses the economy as in pretty good shape right now. The rapid spread of the Omicron variant led to a slowdown in January, but that seems to have proved temporary, and we're going back up again. The labor market is strong, extremely tight, he says. Companies can't find workers, people are quitting their jobs, and wages are rising. And, as he admits, they're well above their target on inflation. The one wild card he does admit to is Ukraine, saying of the Russian invasion, the near-term effects on the U.S. economy of the invasion of Ukraine, the ongoing war, The sanctions and the events to come remain highly uncertain. Making appropriate monetary policy in this environment requires a recognition the economy evolves in unexpected ways. So you can expect more questions about Ukraine, John, from members of the committee. They'll try to drag him into who's at fault on inflation, and he'll try to avoid that.
I imagine he'll try and stick to the script and try and make this boring too. Might be key this moment, anything but boring, depressing in many ways as well. Equity session highs up more than 1% on the S&P, and the Nasdaq up by 0.75% with your sector price action. Here's Abby.
John, we are looking at a fairly robust rally. All 11 S&P 500 sectors are higher, not surprisingly led once again by energy as oil continues to surge right now at 2013 levels. Financials also popping, a recovery there with yields up on those Fed Chair Jay Powell remarks. But you can see, again, all 11 sectors are higher, including discretionary, tech. So investors want back in. We are buying the dip, at least today, at least this morning. As for the last 5 days, and let's see what the effect really is of the Russia-Ukraine war, you can see energy really the top sector, up more than 8%. Metals and mining, though, too. That's that natural resources story on the supply shortage, supply fears. And then banks with yields being going down as bonds are bid, excuse me. You can see financials and the KBW Bank Index over the last 5 days down sharply. All this can change any moment. Volatility, the name of the game, but
of course,
yes.
Session highs right now, at least, that's for sure. Up almost 1% on the S&P. Abby, thank you. As always, your trading diary up next.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
26 minutes in, equities up 1% on the S&P. Yields climbing too. Chairman Powell just moments away. Here's the trading diary. Chairman Powell testifying on Capitol Hill at the top of the hour. Then President Biden discussing infrastructure a little bit later, 3:15 this afternoon. Another round of jobless claims coming tomorrow morning, plus more Fed speak. Barkin, Williams, Chair Powell heading back to the Hill for a second day of testimony. And we round out the week with the payrolls report in America. The estimate right now, the median estimate, about 403,000. From New York, thank you for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Let there be change.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
I won! Look for the winning number in Sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now. But in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100. So $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking, and of course Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue a warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19 they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi Number Fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's Number Fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as the coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack on the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained one man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venegold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venegold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why. He may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Weinergold as an opportunity to leave that troubled home. Weinergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Weinergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Weinergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Weinergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, 1 kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environments, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small and space is really big. And then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations, which all end up in nothing. And the idea was then like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if they, if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's just kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. Asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some passed the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000.
Here's a stock that can change your life.
I see a stock going up and I buy it and I just watch it until it stops going up and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter, it's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers, one of the last holdouts in the world of disruption, finance is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
The Fidelities and the Schwabs and the E-Trades of the world, they look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. So the next step for them is to figure out how to monetize those users and how, even with their small account sizes, to get them to grow with the company and, as it releases more products, come along with them.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation is exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money, I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. People telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't, and the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and StockTwits and Reddit. And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
Soon may the weatherman come to bring us sugar and tea and rum.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big behemoth thing called the stock market that we really don't know a whole lot about, and it's gatekept behind the industry. And so people like want to unpack that. And so my audience is, a lot of them are younger investors who are looking to hone their skills.
Tech and write up.
Kyla and Kayla are two of the more, let's say, professional TikTok influencers.
The Tesla ARK Bitcoin Biotech Risk Cluster.
I've been trading since high school, and it was a really interesting way for me to fill out my decision-making frameworks and to think about thinking. And I think that the more that we can have people thinking about finance, the better that we're going to progress as a society. I think it's a huge gap in our educational system.
If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I made the options video where I was like, options are just like shopping. Rumor has it that this pallet's about to go up in price. So if I come in tomorrow, can I still buy it at said price? And a ton of women just like attacked that video and were like, you explain things so much better than my boyfriend or my professor, or like I could sit and listen to you all day. And I was like, this is what I was looking for.
But TikTok's algorithm does not reward calm and measured videos about responsible investing. It rewards this.
Watch this video for 30 seconds and you'll be rich for the rest of your life.
I try not to say the A word, the ALGO word, because TikTok listens to us.
The algorithm does impact how you feel. You know, you do notice which videos do better versus which videos do worse.
How do you catch someone's attention in less than 60 seconds? And how do you make it something that they're like, I need this in my life? Nearly impossible to do that in 60 seconds. But the people who perfect it are the people that you're going to watch and going to stick around.
And where people are sticking around? Reddit. And its nearly countless subreddits about finance. And by far the biggest one of those is Wall Street Bets.
There's a lot of social media platforms out there, but Reddit is like the social media platform for finance. Places like Wall Street Bets is where it all goes down.
Started in January 2012, it wasn't long before Wall Street Bets adopted a 4chan-like etiquette, leading to their tagline, like 4chan found a Bloomberg terminal.
We had all these unexplained stock moves, and we would be grasping for why stock XYZ jumped 20% in a day. And you would look at Wall Street Bets, and you would see people there talking about buying options in that stock, and it sort of, squared the circle, so to speak, and started making sense. And it was at that point that it was like, wow, we have to start paying attention to this.
Some people on the platform really spend tons of time, and others are just looking for entertainment and to have a little bit of fun, effectively gambling or looking for an outlet, trying to make a little bit of money.
Then on top of all of that, there were stimulus checks. Now clearly this money is going to people who need to use that to eat, to live, but there's a lot of people who use this money to invest in the stock market.
And it's not just stock tips. People quote unquote YOLO their entire life savings or stimulus checks on a single stock. They post what is called gain and loss porn, screen grabbing staggering hits and misses on stocks for the entire community to see.
I'm about to lose everything.
And while some of the people on Wall Street Bets are novice investors, the community contains multitudes.
In one respect, what it did show us among these network groups is they are very sophisticated. They're not a bunch of ignorant people talking to other ignorant people.
And this is where the pieces of the puzzle all come together to wreak havoc on Wall Street for a solid week in early 2021.
It's pretty clear that the combination of more people having retail brokerage accounts and trading apps and more people being stuck at home looking for some kind of entertainment and some kind of community online came together in this very singular way.
What came together is GameStop.
Let's go back to the beginnings of what happened with GameStop a couple of years ago. On the boards like Reddit and StockTwist, a lot of people were talking about GameStop as being attractive value.
Some of them are even, Wall Street alums who left the industry and now still have access to tools that they can use to improve their financial well-being and make very good decisions. And I think Roaring Kitty is a perfect example of that.
GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that.
At the same time that this crowd was talking it up, the hedge fund institutional crowd didn't like this stock at all, and it had the largest short interest of any stock in the New York Stock Exchange going into late 2020.
Short selling is a bet that a stock price will fall, and it's a fairly simple concept. An investor borrows a stock and then sells it. The investor is betting on buying the stock back later for a lower price, before returning it to the original owner, pocketing the price difference.
What a short seller would tell you is that they almost act as a policeman in financial markets, or they're at least looking for companies that aren't what they say they are. And that can range anywhere from an outright fraud that some short sellers try to expose to just a company that's not worth as much as investors think it is.
The problem is, if the stock price rises, the short seller has to come up with the money to buy the stock back. And the more it rises, the more it costs. And that's what's called a short squeeze. And the hedge fund Melvin Capital was on the wrong end of that squeeze.
Melvin Capital lost over 50% of its money in the month of January alone, just from being caught in the short squeeze of the stock.
This is where the disruption comes in.
One of the most wild stories you're ever going to see. GameStop shares absolutely going nuts.
In less than a year, the company's stock has jumped from less than $3 a share to almost $350.
Cheers, everybody!
Roaring Kitty has turned $50,000 or so investment into some $14 million.
Whoa!
Investors all over social media use the free trading app Robinhood to wreak havoc on Wall Street.
They're actually piling on into some of these stocks to really hurt the professional short sellers.
And they all used Reddit, Twitter, TikTok, and Discord to tell one another to keep buying and, quote, hold the line and not sell GameStop.
People are getting cheerleaded for jumping in, buying at the highs. They're saying, keep going.
And it was working too, until
Thursday morning, the trading app Robinhood sent out this tweet. In light of current market volatility, we are restricting transactions, including GameStop.
People were really angry.
Robinhood was supposed to allow the regular people to play the same game these big boys are playing. But instead, we were all taken for schmucks, and they screwed us.
Shares of GameStop are jumping again now that retail investors are being allowed to buy shares of the stock.
But what we learned is that when people organize online, they have the ability to disrupt the market.
And it was a big sign. The ivory walls of the institution aren't as powerful as maybe the institutions thought them to be. I don't know if pumping up GameStop was the best use of billions of dollars, but I think that as a signal to society, it was pretty interesting and powerful.
The GameStop saga was so impactful that both Vlad Tenev and Roaring Kitty were called in to testify before Congress to clarify each of their roles in the saga.
One thing that's emerged from the congressional hearings is that they're interested in how retail brokerages make money and whether they're keeping the best interest of their customers in mind. But it's pretty fuzzy as far as what they would actually do as a result.
While the frenzy around GameStop eventually subsided, it didn't take long for retail investors to find other areas to invest their money.